Hello traders, and welcome to this educational video from Exness on managing money beyond the basics. While most of us know the importance of using stops and targets to manage money, it's also critical to understand what overtrading is to avoid it. Various people define overtrading in different ways. One of them is anything outside the strategy is overtrading. Another, and perhaps more common, is based on psychological factors. If you find that you're stressed and you find it very difficult to turn off or get away from your platform for an extended period of time, it's quite likely that you will be overtrading. And it's very important to avoid this to reduce the chance of losses and tilt in trading. Usually if you're stressed, it's likely that you're going to fail and lose money sooner or later. There are various different ways to set stops and targets in appropriate areas, beyond simply support and resistance. We're going to have a very quick look at 3 prominent ways of doing this now. So if we're looking here at the daily chart of gold, the first and probably the most popular way of setting stops and targets is based on support and resistance. So if we look down here in the area of roughly around 1,690, we've got a possible support that's been tested 3 times. This would be an obvious place to set a stop if you're buying, whereas for resistance, you would use it if we were selling. We set a resistance around the area of the latest high, roughly about 1,910. That's probably the most popular way of setting stops and targets, just because generally speaking it's the most reliable. And the second approach that can be used is to use a fixed amount or percentage of the account to set a stop and a target. Usually the easiest way to do this, open a position first, then drag the stop and target up and down using MT4 or MT5. You can also set them on Exness terminal, just not by dragging. This is generally less reliable because support and resistance are usually more important as areas of retracements or corrective movements. Generally a certain amount away from the price of entry is not a very reliable approach. And the third approach that we're going to look at quickly here is average true range, this indicator at the bottom here, or ATR as it's usually known for short. Typically, traders of commodities use 1.5 or 2 times the value for ATR. In this case, it's about 18.60. So we would be looking at setting roughly the stop about $36 to $38 below the price of entry from here. So somewhere roughly down here, approximately. And the opposite, of course, for selling. And this approach can be quite reliable, but again, support and resistance is probably the most reliable approach as far as the average trader is concerned. And the key throughout all of this discussion of stops and targets is to find the approach that works for you. Just because somebody else has used a certain way of doing things and it works for them doesn't necessarily mean that it fits with your strategy, your psychology, and your own particular skills and shortcomings as a trader. So that's why it's really critically important to test any approach that you use on a demo account thoroughly before you use it for real. So in summary, it's essential to define what overtrading is, what it means for you so that you can avoid it. Remember that stress and tilt are usually going to cause you to fail as a trader sooner or later, and it's important to find your own approach to stops through means of testing. Thank you traders for watching Exness's introductory video to managing money beyond the basics. We hope you found it informative, and we hope you join us again to watch more similar videos in the future.